I trade as Roberto. It's March 4th, 2016. It's Friday, non-farm payroll. The numbers were released about an hour and a half ago, and I wanted to show you how you can take advantage of this FX Advisor 3 on high impact news events. And it's very simple. I would recommend doing this on a demo because the strategy is actually very counterintuitive. What you're doing is you're placing a trade at a very specific area, and in this case, see where it says get ready level? This is where you would actually place a trade when price hits that level. So it's very counterintuitive because at one time this candle was huge, solid red candle, and I'm asking you to buy when it hits that get ready level. And look what happened. It turned around and went back up 60 pips. Went down 60, went up about 67. So that's your entry right there, that initial reaction. Now, after the market has settled down, then we see that it's turned around and went north, and you can take a trade to the upside. But not until this candle closes. This is on, let me just switch over to 15-minute chart because it's a lot easier. Here's a 15-minute chart. Here's the initial reaction to the news. And then there's your trade. Okay, hope that makes sense. Pop-up windows keep on coming up. Anyway, let me just show you a few more trade setups so I can prove my point even further. Here's an excellent example on the Euro Australian dollar. And let me switch over to the 15-minute chart. There was the initial reaction to the news. The market. So this was a solid red candle, a bearish candle. There it was your entry, right where it says get ready level. Remember, you only do this on high impact news events. We don't do this on regular trade setups. On a regular trade setup, you would enter right when price broke that buy level. That's your normal trade setup. And you do this on a smaller time frame so when you're trading a high impact news event. So 5 or 15. Let's look at a 5-minute chart. And there's the reaction again. It hit that level of support and then just turned around and went north. Okay, the initial reaction was to sell, and so you have to be quite counterintuitive when you take these trades. You're just paying attention to this level of support and you're getting in right there when price sold off. And this is a substantial amount of pips to the upside. From the swing lows to the swing high, that's 133 pips on the Euro Australian dollar. Okay, and it's unfortunate that these news events only come out once a month on non-farm payroll. If they came out every week, we can do quite well. So again, it's a counterintuitive trade. You're looking for buying opportunities after the market has reacted to the news event substantially. And this went down about 133 pips, and all it did is turn around and gave everything back. Okay. Let me show you a few more examples. Here's a setup on the pound Australian dollar. It's very identical to the one we just saw in Euro Aussie. There was a get ready level at 190.51. So that price was where you needed to get in. Initially, this candle was a huge, solid, bearish candle. Broke below the support, and you're thinking, yes, we need to sell. And no, you cannot do that because it's a news event, and news events are hugely volatile. So you want to enter a trade, take advantage of this advisory indicator because it will tell you places of support, places of resistance, and you want to be placing a trade right there, 196, 190.51, and there was the reaction over 100 pips. Now, it takes a while to get used to these types of trades because it is counterintuitive. You're looking at one candle that is selling off and it's solid red, bearish, and I'm telling you to place a trade at the bottom of that, and it can be a little bit intimidating because why would it keep turn around and head north? Well, these are levels of support as these are levels of resistance on this indicator. Again, let me just show you a few more, and hopefully you'll be convinced that this type of trading on news events is very, very powerful, very profitable, and something that you need to get used to, because in the past I've made the mistakes of seeing the news event and then taking a trade when the market, unless I got in all the way at the top and was able to capture 50 pips and then exited the trade, I'd be losing on this trade right now. Here's another example on the pound Canadian dollar. Prior to the news release, pound Canadian dollar was in an uptrend. The news came out, there was the initial reaction, and there was a level of support waiting to be taken advantage of. And again, there was a sell-off. This is a huge red candle initially, went down 100 pips. Very important, count the number of pips, because that will determine how many pips you're going to make on the upside, or know that is going to be a retracement. It's unlikely that any currency pair after initial reaction on a 15-minute chart goes 100 pips and doesn't retrace. So your entry would be at a previous support level. Look at all the support level down here. The support here at 189.14, and you'd be up about 100 pips. The beauty of this is that you'd be up in less than 15 minutes. You'd be up on this trade. You wouldn't have to wait. Okay. Here's another trade set up on USD Swiss. Initial reaction, it was US positive, and there it was, just waiting for us to take a short all the way on top. And again, when there's an initial reaction on a news event and it travels a minimum of 50 pips, it's always going to give something back. USD Swiss went up about 70 pips. That was your entry right there. And look what happened. Turned around and gave everything back. Okay. Even if the numbers are clearly positive and there's no mixed news event, that initial reaction, if it hits a resistance or support, you should respect those levels and take a trade there, even if you just exit after 20, 30 pips. Those levels of resistance or support are very difficult to break initially on the first run. So if you see these levels and you see the market take off, it's not going to go blow past that the first time. Maybe the second candle will do that, or the third hourly candle. But initially, it's very difficult for the market after traveling 100 pips to break a level of support or resistance. It's going to react to those levels simply because there's so many orders at these levels of support and resistance to buy or sell that the market reacts to that level. I hope this tutorial has been useful. If you have any questions about this type of trading, again, it's very counterintuitive. You have to start thinking of selling at resistance and buying at support. And the advisory already gives you the levels of resistance and support. You don't have to draw your lines. It just clearly tells you, okay, get ready level. This is a level that market most likely, and there's a high probability that it's going to react to that level after going about 100 pips, 60 or 70 pips. It's hard to maintain that level, sustain this move to the upside when there's a strong resistance, and you start thinking and getting used to taking trades at those levels of support and resistance. Have a good weekend. Thanks for watching the video. And again, if you have any questions, just send me an email. If you have not purchased the FX Agency Advisor, just purchase it. There's a link at the bottom. If you do purchase it through this video, then you will receive trade signals, videos like one you just watched, and did I say trade signals? Yes, daily trade signals will be sent to your email. And I send out 1 or 2 trade signals a week. Thanks for watching. Have a good weekend. Talk to you guys soon.